see you.
Always great to be here, Annette. Nice to see you.
So this is pretty big news. News that a lot of people knew was coming, that at 10 a.m. this morning, the interest rate could be going up by a quarter point, maybe even half a point.
Yep.
Timing that it was just 2 years ago this week, the Bank of Canada cut that first lending point, the key policy rate, all in response to try and get ahead of what could be astronomical fallout from what was the beginning of the pandemic, essentially. So here we've been warned, this is coming. We are going to start seeing those rates going back up because everything is getting a little bit more out of price and out of touch for a lot of people. So how is this then, if that news then is delivered at 10 this morning from the Bank of Canada, how is this going to immediately impact the housing market?
So there's a lot of moving wheels, right? There's a lot to digest with a interest rate hike. As we know, the housing market right now has been really intense, and for anyone who is out there right now, the spring market is now. It doesn't matter that unfortunately we are still dealing with snow. We are seeing a spring market. We are also, as Annette, we talk about time and time again, there is no inventory out there, absolutely none. I was talking to a client the other day who was looking in Stittsville, and all of Stittsville, which is more than 100,000 members and residents there, and there's only 3 homes that are available right now in a 4-bedroom. So the inventory is so low that we are seeing inflation rates really, really rise. Food, gas, we are all feeling it. And so the interest rate hike is there to calm everyone down and hopefully get things moving. What does that mean for homeowners? Well, it particularly affects those in the variable rate where they have been sitting at a lower interest rate and then they're going to be bumped up. So what does that mean for homeowners? If you are sitting at a variable rate mortgage, you may decide that now's the time to lock in for a couple of years, as we do see that variable and interest rates will continue to move up over the next year, if not year two. We are going to see that the Bank of Canada, up until 2023, they meet 8 times a year. And so up until 2023, we may see interest rates a lot higher. And because of COVID, because of this pending, well, the current war, they are trying to correct the current economy in order to hopefully calm everything down.
So with word of that then, and let's presume that interest rate goes up today, let's say a quarter percent, just putting that out there. Does that then, and you talked about how, 3, 4-bedroom homes in all of the Stittsville neighborhood, 100,000 people, that's not very much. And inventory has been short for a long time now. Does that then slow down even more the amount of people who go out looking for a home when interest rates aren't at that historical low and it becomes quite lucrative and attainable to get into the housing market?
And thank you for that question. It'll be curious to see what happens, because there are 2 sides to this coin. And we'll be curious to see what happens. The conversation that I'm having with buyers and sellers are on both sides. So buyers are definitely and appreciably and very with high level of frustration are getting pushed out, and I recognize that. The average sale price now in Ottawa is over is 700,000. It's over 700,000. So we're getting people pushed out. We're getting people going to the outskirts of Ottawa so that their home ownership is more attainable. Yet when you talk about so buyers are really feeling that pinch when it comes to mortgage rates. And yet when I talk to sellers, you know, they're looking to downsize, they are seeing the opportunity to um, to capture this market in order to sell a lot higher. Having said that, you have to look at the market like a teeter-totter, where you have high sellers, low buyers, and they work out on their own. And so it'll be interesting to see what this does, because sellers also have to realize that interest rates being increased may also affect the seller's market. We haven't seen sellers jump on the barrel yet
Mm-hmm.
for going on the market, which is very frustrating for all my colleagues, in the fact that it doesn't matter that the grass is green. Now is the spring market. Now is the time. And that we've talked time and time again, you know, list now, list now, list now.
Yeah.
That's a big conversation that we're having with everyone.
All right. Well, we're going to continue this conversation with Colleen on the other side of the break. We're welcoming your questions. When we come back, we're going to talk about the offer process. The interest rate expected to rise this morning. Let's talk about that process for making the offer, because that's an intimidating one that I couldn't imagine doing without a realtor. It is so competitive in this city right now, and it is, I mean, we are still, like you said, seeing a lack of inventory. People have to move for whatever reasons, so the market continues, but it's a pretty tough one, isn't it?
It is, and I really do feel for new home buyers. I'm actually out right now with my daughter and what I suspect to be my new son-in-law, and it's frustrating for them. And so, you know, when you're out looking at homes, you only have one, maybe two to look at, and you're writing offer after offer. And so the biggest thing that I tell buyers right now is the fact that you need to plan, and you need to plan ahead, and you need to get market education. Where do you want to grow? Where do you want to land your feet? And what I'm talking about with even one of my other buyers is the fact that this particular family is simply, I need to get into a home, get into the market. And that is something that I would definitely encourage, you know, those millennials and everything else, is the
Mm-hmm.
fact that you need to just simply get into the market. It may not be the white picket fence single family home that you wanted. Getting into a 2-bedroom stacked condo may be more affordable, yet you are in the market. Once you are in the market, then you have a little more leverage, in not only in your credit, um, yet also in negotiations.
Right.
So that's what we are seeing right now.
Okay, we do have a question coming in at this time, Colleen. This is from Marilyn. She writes, what is considered an average family home? I see reports saying that the average family home in Ottawa now costs $500,000, but I can't find any information on what this means. Is this a 3-bedroom single family dwelling, or is it a townhouse? Good question. What do you think, Colleen?
It is a really good question, and thank you for that, Marilyn. What we are seeing right now, it depends on your area. 500,000 right now seems respectfully a little low. So it depends on the average price in Orleans, the average price in Westboro, the average price in Glebe, and the average price in Manotick, and the average price in Stittsville are very different. So you need to look at your neighborhood. The other thing that I talk about is also what what the Ottawa Real Estate Board, not myself, the Ottawa Real Estate Board comes out with stats every month. It's usually about the second week of the month, where they go back into, so for example, we're waiting for the stats on February, so we expect those, you know, next week. And and so they put everything together, you know, everything from Cumberland to Rockland to Carleton Place, right? They wrap it all
Mm-hmm.
in one big pretty bow. And so they manifest that. And so obviously you have more expensive homes in the Glebe than you do necessarily in other parts of the city.
Mm-hmm.
500,000, right now we're seeing 500,000 would be very potentially an interior unit townhome where you might have to get into, again, multiple offers. And so you have to figure out what I tell my clients. I want to make sure, A, that you are not forced into a decision. We always do market education with our buyers and make sure that they never have to make a knee-jerk reaction
Right.
to a home. Because when you are buying a home, no matter what price range, no matter what it is, no matter if it's a townhome or a luxury single-family home, you need to make sure that you created a 5-year plan so that you never feel like this is not the right fit.
Right.
And so that's what we go through with our buyers in creating at least a 5-year plan. Our goal is that you fall in love with your home and you're there for 5 to 7 years. If it's your first home, I never want my clients or anybody in reality to say this was a wrong fit and now we have to sell in a year or two.
Yeah, like you said, right, it's a place where you're going to land for some time. So, a good realtor will then say, well, there's a comparable home that sold for this much. So that's probably what we're
Yes.
looking at the minimum for yours. That's the work that the realtor and your realtor, you should expect of them to do. Also interesting to know, you had said right off the top, what the average home is in Ontario or in Ottawa is $700,000 now. And we have seen that data coming in the last couple months, which is remarkable. It wasn't that long ago where it was under 500,000, as Marilyn suggested. When we talk about 700,000, it's certainly a whole different ballgame. Okay, we're going to talk a little bit more about the offer process, what a bully offer is, and holding back offers on the other side of the break. If you have a question, holding back offers. So this essentially means someone selling a house is going to say, okay, they start showing it and they say, today's March 2nd. On March 10th is the day we're going to accept offers. No bully offers until then, and that's the day. We don't want to hear from anybody until that day, and then on that day they decide. Walk us through that process and why it is that way.
Okay, so, and I know that a lot of people are like, what's going on and why, and are you trying to build up the price? The fact remains that, so going back to basically kind of the rule of law of realtors is the fact that when you are a selling agent, you're in your job, you are mandated by the rule of law of real estate that you are to represent your clients, your sellers, in order to get the best price for them. Okay? So when you have that and when you have our current conditions of the market, which we've talked about so many times in the fact that there are no homes available. So what we are seeing right now is the fact that in order to be a selling agent that represents their seller properly and appropriately, the rule is the fact that we are supposed to get the highest price possible. Now, what does that look like? In a market where most of the neighborhoods here in Ottawa have very, very low inventory. And so holding back offers literally means that we hold back offers for a week, and at a certain time and a certain date that we need to present offers. And so offers come in and you pick, it may not even be the highest price. We talked about it the last time where my clients did not pick the highest price offer. They picked something that had a more advantage of the closing date. Their deposit was stronger and the conditions were less. So there's a lot going on when it comes to that date. Now, having said that,
yeah,
sorry, go ahead.
If I could just, what's in the bully offer? Where does this come in, and what does that look like in the process?
So there are two frames in mind when it comes to the bully offer. And the bully offer, it's such an ugly term. I wish it never existed, to be honest. The proper legal term is a preemptive offer. And so let's say, for example, if we use your example, Annette, if we're going to sell a home today, which, like, perfect example, I'm listing a home today, Wednesday, and we're accepting offers next Wednesday. Yet what we say is offers will be dealt with next Wednesday, yet we would consider a preemptive offer. And what that looks like is someone coming in strongly, and usually it means without conditions, and they are really eager about this home. Now, again, this is not a market that realtors like. I really want to stress that fact. I cannot stress this fact. Realtors do not like this market right now. We are not creating it. We are not for it. It is something that we are not comfortable with. We really would rather a balanced market. Yet our job is to represent our clients. And so in this case, representing a seller, they've asked for offers to be held back. Yet if someone comes in with a very strong offer, no matter what the offer is, we should position it to our clients and present it, depending on what the clients have decided. And we all have different personalities. We all have different mindsets. So there are some sellers who say, no, I'm not looking at any offers whatsoever for a week. I'm not going to deal with them. I'm not going to look at them. You do not have to present them. And that's what we call a no conveyance. And you will see that a lot of times. If you say no conveyance of offers, that means no conveyance. That means you cannot do a bully offer.
Right.
If you simply say offers are presented in a week, yet we will consider, a really strong offer, that is something else. It's not a great way to do business. You either pick one or the other.
Right.
Yeah, different realtors, as well as you have to understand, sellers want what sellers want.
Of course.
And so we have to represent our sellers in the way that they want to be represented. It doesn't mean breaking the law. It just means presenting all the information that they need in order to do it properly.
Right.
It's a frustrating market out there. And again, if anybody listens to this, it is spring market now. It doesn't matter that the grass is not green.
We know that when it comes to Ottawa. Spring arrives long before we see that green grass. Colleen, thank you. It's always great to chat with you from Trinity Stone Realty. There's the information we'll put up on your screen there if you'd like to contact Colleen directly. It is 9:54. We'll take a quick break.